Thanks very much, Tim. It's a pleasure to be here today at Share Cafe's Hidden Gem to present Knosys to the audience. Next slide, thanks. So with regards to Knosys, it's very important to have, I think, a very clear mission statement. And ours is that we deliver solutions that empower businesses of all sizes, from large enterprises to small companies, to make smarter connections with their information and knowledge assets. We do this through a portfolio of SaaS solutions that we offer to the market across the world. Next slide, please. So now Knosys is a global company. I wanted to just really point that out. We have a presence in 5 countries. However, we derive most of our revenue from Australia, the US, and the EU. We've got approximately 353 customers across the globe and over 380,000 licensed users of our technology. And from a company point of view, we have approximately 67 staff members, and those people are spread across the globe, and 20 of those members are dedicated to R&D and product development. Next slide, please. As I mentioned, Knosys has a portfolio of SaaS solutions. Our first solution is our Knowledge IQ product, which is our knowledge management solution for contact centers, support desks, and businesses with branch offices. It's primarily designed to help people, particularly agents, company staff, to engage with their end customers in delivering the right information, following the right processes, and really creating a very well managed, well thought through engagement with their end customers. The second solution we have is our Green Orbit intranet solution, which is fundamentally an internally focused solution on an organization's people. And as you can imagine, in today's world, during COVID and post-COVID, organizations had to come up with means of communicating, collaborating, and providing an engaging sort of workplace for their employees. And this really helped to maintain productivity, not only during COVID, but as we sit here today. The third solution we've got is our library management system. So it's primarily designed to enable libraries, staff to conduct transactions with their end customers. It's also there to enable members of those library facilities to access information remotely in a really engaging, once again, engaging, user-friendly way for that. So as you can see, we've got 3 solutions that make up our portfolio. Next slide, please. So one of the important things is, what's the driver for these solutions? It's pretty simple. The first is the increase in remote workers. Now, this started before COVID. It was accelerated during COVID. And as we sit here today, it still exists where a lot of companies are implementing a hybrid work model. The second driver really is for customers. Organizations' customers expect consistency when they're contacting the business. Now, they may contact them through their contact center. They may contact them through their digital channels, such as their websites, using their mobile phones, using a chatbot. An organization has to make sure that the information provided through all the channels is consistent, accurate from that point of view. The third driver is governance and compliance. Now, this is especially important in organizations that operate in highly regulated environments. These organizations need to be able to track and trace all information used in interactions with their end customers in order to comply with the requirements for their particular industry that they exist within. And then the final one really is content explosion and information overload. As we all know, we're generating a lot of information these days and have been for well over the past 2 decades. So what our solutions do is provide a very targeted view of information to the company's end customers and to their employees. We like to think of it as a magnifying glass approach, where an employee only gets to see the information, or a customer gets to see the information that is relevant to him. And that's a common theme across all three of our portfolio solutions. Next slide, please. So this slide really generates or shows you a view of our customers and the diverse range of customers that we have within the organisation. As you can see, we have some really well-known brands amongst the customer base, but in terms of a split between enterprise customers and mid-market customers, we currently generate 13% of our revenue is derived from enterprise customers and 87% of our revenue is from mid-market. So as you can see, we've got a good split between enterprise and mid-market customers. Now, the solutions have a very broad appeal across many industry segments, but the main segments, as you can see from the bar graph, are government, which is a very big part of our business, professional service organisations, financial services, and we're really seeing a growth in the health sector in terms of our products and solutions. Next slide, please. So we are a SaaS business, as Tim mentioned. So the key metric that we look for is our growth in our recurring revenue. As you can see from the bar graph on the right-hand side, we have very consistently kept growing our recurring revenue, both organically and through the acquisition. So we've gone from 3 million just on 2 years ago, year and a half ago, to over 9 million in recurring revenue for the business. In terms of where we're doing from a gross margin point of view, as a SaaS company, our average is about 88% gross margin, which is expected in a SaaS environment where we're running a lot of our corporate services, that be finance, sales and marketing, support, are common across all the solutions. And that's how we keep generating that very good gross margin. In terms of our churn, it's quite low, it's less than 6%, and predominantly that comes from the mid-market customers, which are the smaller valued customers within our portfolio. If I can have the next slide, please. So this slide, I really wanted to talk about, well, what's our growth strategy for the business? As you can see, we are targeting to grow our customers in the next 2 years to over 1,000 customers, and we want to increase our licensed users from its 380,000 somewhere towards the 1 million mark. And we're going to do this through obviously an investment in a lot of resources that are directed towards sales and marketing, and I'll talk more about this on the next slide. Next slide, please. So in order to achieve these strategic goals, we really have a 5-pillar approach. The first one is to grow revenue from the existing customers, and we have seen this not only in our core business of knowledge management, but through our Green Orbit intranet business and through our Libero library services business. And what I mean by that is we're extracting more value from that existing customer base through a process of upgrades, through a process of increased license numbers. Over the next financial year, we're really going to focus on pillars 2, 3, and 4. The first one is to grow new customers. You've probably seen recent announcements where we've had a lot of success in government for knowledge management. We intend to replicate that success for Green Orbit this financial year and start seeing that happen with Libero as we go forward. We're also in the process of investing in growing our brand. It's very important. That helps us win new customers. It also opens up opportunities for our solutions across the broader customer base. We're also, as a software company and a SaaS provider, we invest heavily into product development because we need to keep the solution relevant and we need to make sure that the solutions are attractive to the customer base. And the 5th pillar to our strategic growth is going to be acquisitions. Now, our focus over the next 12, 18 months is to grow the existing portfolio of solutions organically, but we always keep an eye out for acquisition opportunities that may help accelerate our growth in an important sector that we're currently within. So in summary, I think it's important to understand our growth strategy is funded through our cash reserves of about $3 million, and plus our ongoing cash flow from our customer base. So we're well funded to implement our growth strategy over the next couple of years. So altogether, we have a fantastic portfolio of information solutions. There's currently a large demand in the market, and we're fully funded to continue strong organic growth within those market segments. So thank you very much for listening in to the presentation. Over to you, Tim.
Great, thanks, John. We've got quite a few questions, actually. Can you talk through, there's obviously been a lot of volatility in the equity market recently, and particularly from a tech perspective. Are you seeing any impact of that on your ability to sell to your clients?
No, we've been very fortunate during COVID and post-COVID. We've actually seen an acceleration in particularly knowledge management. In the last 6 months, there's been a lot of tenders. We've been fortunate enough to win the majority of those tenders in Australia. And we're also seeing customers who held off buy decisions in Green Orbit starting to reactivate those projects. So the volatility hasn't impacted our existing customer base or our new customers at the moment.
And the government tender process, I assume you're talking about, I assume there's a kind of a long timeline to that, but I would have thought that the government contracts would be very valuable. Can you talk through that sort of client base?
Yes, I mean, the government contracts, unlike some of SaaS solutions in other areas of functionality, ours we generally contract for 3 years with extensions of 2 years as a general form of the government contracts. So they're generally, long-term contracts, which is really good for our prediction of our recurring revenue, and it's a good stable base of revenue coming into the business.
And what's that sales process look like outside of the government tenders? I think Kathmandu or a client there. How do you work through that sales process?
Yes, I mean, knowledge management generally, because of its value, is through tendering process more often than not. With regards to, for example, Green Orbit, Kathmandu is a customer of that. These are generally done by proposals. So, we get it, the customer gets in touch with us, or we're in touch with them through outreach or through digital marketing. We do demonstrations, and then we present a proposal, and then we negotiate proposals. So the sales cycles for Green Orbit Intranet, for example, are probably somewhere around 3 months from initial engagement to hopefully you sign a contract with the customer. And once again, we're trying to, with Green Orbit, implement very similar to knowledge management, where we have a 3-year initial engagement as opposed to 12 monthly. And that once again supports our business operations and plans.
And I mean, they're very impressive margins, of course. From an M&A perspective, what are you looking for? And I know you've made kind of 2 acquisitions. What sort of synergies does that bring to the business?
Yeah, because we implement a shared services model, all of these solutions are just solutions. They're not individual businesses or divisions per se. So we're able to have common sales, marketing, support, things like this. So in terms of acquisitions, potential future acquisitions, ones that would be attractive to us are ones that are within an existing portfolio solution. So it might be, for an example, it could be another intranet solution which is more Microsoft based, as an example. Within knowledge management, our knowledge management system is very capable, but it may be a simple help desk tool that we may be interested in. But it'll all be within one of the existing solutions target markets as such. So we're not looking to add a 4th type solutions. We're more looking for solutions within the areas that we're currently operating within.
And just finally, John, who are you competing with? Is there any ASX listed companies that you would consider peers?
Look, we have no ASX listed companies that are peers. Most of our competition in the enterprise space comes from US companies. Verint and Highland are the main ones we come across at the enterprise level and government level. And then with regards to sort of our mid-market, it's more individual private companies that we come against.
Great, John. That's all we have time for. Have a nice weekend. We'll follow your story with interest.
Thanks very much, Tim.